So hi everybody, we will begin and more people are joining as we speak. My name is Grodecki from Bridges Israel, and I will be moderating this panel to discuss actual case studies of impact investment in both private equity and venture capital. But first, I would like to apologize on behalf of my partner, Sandrine Monsma, who was supposed to moderate this panel, but was unable to participate because of personal reasons. So impact investment is now a fact. It's a growing economy that has reached more than $700 billion in 2019 worldwide. Specialized private equity and venture capital investors have been investing in this space for more than a decade. And recently, mainstream private equity and venture capital investors are taking innovative approaches to reach the SDGs. In this session, we will try to provide an overview of case studies on specialized impact investing funds and their portfolio companies, as well as discussing mainstreaming impact into non-specialized venture capital and how impact migrants could become the new norm. So I'm very happy to have with us today two practitioners of impact, Cecile, an early veteran of impact investment and now leading the field at Pitango, and James Hurrell, a partner at Bridges Fund Management. We will begin with a short introduction of our panelists. Cecile, maybe we start with you.
Sure. Hi, everyone. Very happy to be here. So my name is Cecile Blilious. I'm, as Ron mentioned, I'm the head of impact and sustainability for Pitango Venture Capital, but I've been an impact investor an impact practitioner for almost 2 decades now, seen the growth of the impact economy, and that's been really great. And also seen how technology is getting a bigger and bigger share into this impact economy and where Israel can play a major part. And this is what we'll be speaking about in a few minutes.
Great. And James, please introduce yourself.
Great. Good afternoon, everyone. I hope you're well. So my name is James Hurrell. I'm a partner at Bridges Fund Management in the UK. For anyone that hasn't come across us, Bridges was an early pioneer in impact, set up about 20 years ago by Sir Ronald Cohen, who you all know. We've got about $1 billion assets under management today, and that's across a range of different fund strategies, and that includes property, growth funds, long-term capital, and then outcomes contracts. We've made over 100 investments over the years across 4 different impact thematics, and I'll go into one case study in a few minutes. I'd probably also just flag, Bridges is a founding B Corp in the UK, and a PRI 2020 leader as well. And then the other thing I just flag is Bridges work in the overall sort of market building as well. So we helped establish the Impact Management Project. I'm sure many, if not all of you, have come across that. Please do take a look at the website if you haven't. But really, that's bringing together thousands of impact investors globally to ensure a common approach and language centered around the 5 dimensions of impact, being what, who, how much, contribution, and risk. So I'll pause there, hand back to you, Ran, and look forward to speaking about a case study in a few minutes.
Great, thanks, James. So just to introduce myself, my name is Ran Grodecki. After 10 years working for operating companies, I've spent the last 17 years in private equity in the Israeli market, and 2.5 years ago founded Bridges Israel together with my dear partners, Sandrine Monsma and Gal Hayut, and we'll speak a little bit more about Bridges in a few minutes. Just housekeeping, at the end of the session, we may have a few minutes for Q&A. So if you have a question during the session, please type it into the chat, and we will try to address a few based on the time left. And you can also feel free to mention which panelist you direct your question to. And maybe now, just before we begin, we put up a short survey. We had a practice in the General Assembly. So if you can also choose from the survey what kind of organization you come from. We see a lot of investors are coming in, but also a lot of entrepreneurs. So it's a good mix and match. And the other good thing is that we have people from all across different types of organizations that are interested in impact. Great. Investors are here, so entrepreneurs, you have a lot of work to do. Thank you very much. Why don't we switch into the actual case studies, meet the investors, and discuss some impact investment practices. So first, James, Bridges Fund Management is one of the first specialized impact investors in the world. Could you please tell us a little bit more about Bridges itself? Explain your growth fund philosophy, how it evolved, and specifically, and that's a challenge, how competitive financial returns can be achieved side by side, strong social and environmental impact, and maybe present a case study to demonstrate.
Great, thanks. And there's quite a bit to cover there. So our first impact fund was a 50 million fund back in 2002, which was actually backed by the UK government, and it was invested into 26 small investments. So sort of quite venture-y in terms of profile. And going back all that way, it was a really pioneering strategy, but was, the impact strategy was around focusing on underserved markets in the UK. But, as I said, really pioneering at the time, and the concept of delivering an impact alongside financial returns really was quite unheard of. If we fast forward to today, the way we all think about impact has really changed and evolved a lot since then. We're really now centered around 4 themes, being education and skills, healthier living, still underserved markets, and then a sustainable planet. And today we're looking for impactful growth businesses, really making 1 to 5 million of EBITDA. But it's worth saying we're still focused on delivering private equity returns alongside impact. To bring all this to life, I think it probably is worth diving straight into a case study now. And the business I'd like to talk to you about is here in the UK called World of Books. It's a fantastic business, one I'm really proud of, and it's a really exciting case study. So I'd just like to talk to you really a bit about what the business does, the transaction we did, how we've supported the business, and then to your point, Ran, a bit about the financial and impact performance and how they really move in lockstep together. So the problem we're seeking to address here is around consumption. So SDG 12, which along with population growth is leading to increased quantities of waste. So in the UK, there's 200 million tons of waste a year. And although recycling rates have been increasing over the past decade, around 25% of that waste still goes to landfill, which is the biggest contributor to carbon emissions. So in terms of World of Books, it's a mission-driven circular economy business, which today is the largest reseller of used books, secondhand books in Europe. And the largest markets for this company are the UK and the US. Although we are actually selling to over 170 countries worldwide. And as a bit of fun this morning, I just asked the team to look at books sold to Israel. And last year we sold 9,955 books to Israel, with the top 5 being number 1, a book on English language skills, number 2, a book called Cindy Tom, number 3, a biology textbook. Number 4 is my favorite, which is an intriguing book called The Playbook, Suit Up, Score Chicks, Be Awesome, which I have to say doesn't feature in my personal top 5. And then returning to slightly more mainstream, in at number 5 is Harry Potter and the Philosopher's Stone. Just going back to the business, it was set up 15 years ago. A man called Arthur, the founder, saw a charity shop employee tipping used books into a wheelie bin destined for landfill, and thought that's not right. And today the business sources about 80 million used books a year, principally through a network of 6,000 charity shops, but also from consumers as well. And the key to this business is technology, which is used to drive efficiencies in the pricing model. And the technology really determines which books are kept to be resold, which are given away through our donation scheme, and then which are recycled into cardboard, those being the three options for each of those 80 million books. And it's bespoke own software, which has been developed. The algorithms have been developed over 15 years by 60 software engineers. So you can think about the business as having three parts. There's the sourcing of books from charity shops or from the consumer. There's the operations and the tech platform. So we're physically handling those 80 million books. And then there's the end destination for the books. And the aim here is to maximize the number we resell. And that's both from a commercial and an impact perspective. And we sell books through our own platform, worldofbooks.com. Please go on it, buy some Christmas presents, as well as third-party platforms, obviously including Amazon and eBay. In terms of the transaction we did, so we bought a majority stake in the business in late 2016. We invested about 12 million sterling, buying shares from the founders. And that was also to reset the management team. So businesses often reach a point where people need to change, the management needs to change, and the founders needed to step back, and we brought in new management in a phased way over time. So there were financial motivations for the sale, but also the entrepreneurs, the founders, wanted an impact investor. They wanted a partner that would help support on maximizing impact return as well as commercial success. So in terms of what we've done on impact and financial performance over the years, so firstly, we've helped World of Books become a B Corp. So Bridges itself is a B Corp. We like the accreditation. I think it's holistic in nature and encourages action and improvement between tests. We hired a head of impact. We've published our own impact reports and really established more rigorous measurement and management of impact, so that today we can measure the emissions from reselling or recycling a used book, and we can compare that to making and selling a new book. And that's really where we can see the impact and commercial returns going hand in hand. And just to sort of bombard you with a few statistics. So we know recycling a book results in 38% less emissions compared to landfill. Making cardboard with recycled books is 24% more efficient in terms of emissions than using virgin material. And reusing a book causes negligible carbon emissions apart from logistics, thereby resulting in sort of 95% less emissions than recycling. So we measure all that, we report on it, and as you can see on the slide, we're working towards carbon neutrality within a couple of years from now. And then finally, in terms of impact, alongside all of that, we're looking to donate 1 million books, and we're also creating an income stream for charities along the way. So really proud of the impact that's happening. Alongside all that, bottom left of your screen, you can see the financial performance over the 4 years since we invested. So essentially the business has doubled in size. It was making about 4 million profits on 40 million of sales when we invested, and has more than doubled over the period. We'll make about 10 million of EBITDA this year, and growth has been really consistent, and that's come from internationalization of the business, principally into the US. I mean, your purchases from Israel have helped, but that's not been the fundamental driver. COVID has been good. So obviously the move online, people have been at home reading more. The high street has suffered, and as a re-commerce business online, we've traded well this year. I'm conscious of time here, Ran. I guess just to conclude, I think the future for this business is a far greater international presence. As I said, we've moved successfully into the US, where there's a massive market opportunity. I suspect the product range will also grow over time. But I hope and I believe that having an impact, hopefully as has come across in the presentation, I think both social impact and environmental impact in this case, will continue to be central to order books and help drive that continued financial growth that you can see. So I hope you found that a useful case study. I'll hand back to you, Ram, but happy to take questions as time permits.
Great, thanks, James. I think it's a great example of how lockstep impact works. And I promise to contribute my side of demand with the Harry Potter acquisition later this week. So a few words on Bridges itself, and then I'll share with you a case study from Bridges. So Bridges is an impact investment fund which invests in Israeli businesses to generate competitive financial returns alongside significant measurable social and environmental impact. And we are very proud to be an independent affiliate of Bridges Fund Management. And indeed, we utilize their impact methodology, deep know-how and brand, and thank you, James, for that. A few numbers on us. The next slide. We were established about 2.5 years ago. We raised $80 million, all for impact investment, with about 40% of the funds raised from international investors, which is interesting. Also important is that we were able to attract institutional investors, as Israeli ones, who chose to do impact investment through our fund. We employ two investment strategies. One, which we call impact growth, which is very similar to the one James just described, which are investments in relatively mature companies with existing revenues, typically generating local or what we call place-based impact at the place of their operations. The second strategy we call impact tech, which are early stage investments, usually after a product is already proven and there is a commercial or initial commercial traction. Typically with tech investments, we take Israeli technology to the world, so the impact is expected to be global. To date, we finalized investments in 10 companies with an average investment of $3 to $4 million each from different segments of the economy. In all of the investments, one of the partners from Bridges sits at the board of the company and tries to assist in developing the business, but also in impact measurement and improvement. So now let's discuss one example of impact growth called Nazid Impact Food. Nazid is really an exciting growth investment for Bridges Israel. About a year ago, we invested $4 million and created a great partnership with a Bedouin entrepreneur called Ibrahim Nassasra, which I'm proud to call today also a friend. Nazid is a school catering business, providing healthy meals to schools across Israel, while providing fair employment to Bedouin women and men who otherwise would not have an opportunity for fair employment. As part of the impact measurement, we did a survey and we found that 84%, which is an astounding number, of employees said that they experience a positive change through their employment at Nazid. The state-of-the-art facility is located in the south of Israel, near the Bedouin town of Rahat. The company is growing nicely. You can see on the bottom left the number of daily meals the company produces and delivers every year. So this is a daily number. But what's interesting is that you see the correlation between the number of meals and the number of people employed in the company in the blue line. And this is exactly what we call the lockstep between the impact and the business. Obviously, with COVID-19, when the education system partially closed, we do see a reduction in demand, but we believe that in the post-corona era, we will gradually grow to 25,000 meals a day, and the company will employ more than 100 employees in fair terms and conditions. In addition, I'm happy to say that these days the company is building already a second factory in the south to help grow our business, our revenues, our profitability, but will then be employing additional Bedouin women and men in fair terms. So I think this is a very interesting example of catering to the needs of people with a very high unemployment rate and providing business success at the same time. So with that, I will switch to Cecile. Cecile, you are one of the first impact investors in Israel, long before we did impact investments. First as an angel, then as a specialized early stage investor, and now in an exciting new position in Israel's biggest venture capital fund. Could you explain, please, the concept of impact migrants using a case study to demonstrate it?
Yes, of course. So, like you said, Ran, to me, this position at Pitango is part of my personal vision of mainstreaming impact. I believe that if we want to really have a high influence or use technology to create solutions to the biggest challenges that we're facing here, in the world, we need to include the mainstream investors, the mainstream venture capital funds, the mainstream startups, and just at some point stop saying impact. Like just every tech investment will have a positive, measurable, intentional impact, and that's really how I see this happening. And moving to this position at Pitango is actually what allows me to follow this dream and migrate the whole venture capital ecosystem into creating impact. So Pitango is probably the oldest and one of the biggest venture capital funds in Israel, around here for over 25 years, across 11 funds, with actual 3 dedicated funds of Pitango First, which is a early stage fund, Pitango Health Tech, focusing on healthcare, food, etc., and Pitango Growth, which looks at high volume and growth companies. As you can see here, I'm not going to go through the numbers. It is a very prominent fund and quite a mainstream fund. So all the LPs of Pitango never invested in Pitango because they thought Pitango would make an impact. They just invested in Pitango because the team is a great team. They expected them to maximize their profits and invest in the best tech companies coming out of Israel, mostly out of Israel. But then the world shifted and the world started looking at ESG and the sustainable development goals and impact and all of this all together. And the founding partners and managing partners of Pitango, mainly Chemi Perez and Rami Kalish, whom some of you may know, decided to be what the world needs now and actually start integrating the ideas of ESG to SDG into a whole philosophy that goes into the fund and across all funds, and not necessarily in a dedicated impact fund, but instead across all our activities. And that means deploying an impact strategy across all the processes, meaning, first of all, ourselves as a fund. Second, looking at new deal flow and how we screen them, how we add the ESG criteria into the way that we screen companies and integrate that into our due diligence process and present to our investment committee, which also takes this under consideration when a decision on an investment is made. And also, when here I come to the impact migrants, to look at our existing portfolio companies and think about how to migrate them into adopting ESG and SDG methodologies and actually integrating them into their business while creating actually better, more profitable, more resilient businesses without actually having to change the company businesses. And I would like to use one example of a company that has gone through this migration, just to show what the ESG, SDG continuum strategy is. When we look at our either existing companies or new portfolio companies coming in, we rate them according to this continuum, and we try to understand where they are in the process. It doesn't mean that a company that doesn't have SDG objectives embedded into its business or a clear impact theory will not receive an investment. Instead, we would like to check that the intention is there and the willingness of the founders is there, and they're actually about to create a company or have a company that is already creating positive impact, but maybe doesn't track it, doesn't understand how to blend it into their business processes, and generally doesn't speak about it so much. Part of it, by the way, is because it just wasn't part of the conversation, but now it certainly is. So if we go to next slide, please, Vanessa. Yes. So let me give you an example. And I was really thinking hard about which example should I use. Should I use an early stage company? Should I use a growth company? Because there are always questions with early stage companies. Entrepreneurs are saying, well, is this the right moment to think about our ESG or impact strategy? We just have 2 entrepreneurs and a PowerPoint presentation. Why would we just go into it right now? And to this I say, yes, but this is exactly the right time to build your company culture, to understand how inclusive you want to be, how you hire your employees, what kind of abilities they have to be included in the profit sharing, to make sure that there's diversity and inclusion, to make sure that your carbon footprint is low, and certainly if you have some material production, that should be included, and all in all, just build good corporate governance. So that's for the early stage, and that's where we help them verbalize and frame their impact strategy, and off they go. And we work together with them, of course, on a continuous basis. But it's more of a challenge to look at a company that is already existing, like VIA, which is a company that just recently raised a substantial amount of capital at a valuation of more than $2 billion. So this is a company that is in the shared mobility space. Nobody thinks that VIA is a non-profit or it's not out there to maximize its financial returns, but it is a company that is certainly addressing several of the sustainable development goals, as you can see on the left side of the slide, and actually is looking at 2 major problems. One of them is the congestion that is created in the last mile, so inside the city centers, by using private cars with usually 1 occupant in the car, and replacing that with clever transportation. So VIA is creating transportation as a service and providing local companies with the ability to manage their fleet in a smart way. And this will result, of course, in a reduction of the amount of cars that are in the city centers, a reduction in carbon emission, of course, CO2 emission, etc. Next to that, there's the social equity problem of transportation. I'm sure that you all recognize the fact that affordable and accessible transportation is key to social mobility, to people being able to travel from remote places into city centers for jobs, for access to education, to healthcare, even to go shopping when that allows. So it's really about creating social equity as well as environmental impact. And we actually started by working together with VIA by, first of all, getting the total buy-in of the founders who were really excited to understand their mission and their impact and measure it. Then the company appointed a task force, which was comprised of people from around the company and could provide their own feedback about their own processes. And then we started reviewing, first of all, the ESG. So we started seeing how the company is managed, how they're treating their employees, what they're doing about privacy of their users, privacy of the employees, etc. We looked at their corporate governance, and then we started reviewing their SDGs and figuring out how their business is actually creating the results that are embedded into the Sustainable Development Goals. So we did that analysis, and we're very proud to say that actually the result of this process with VIA is that VIA has integrated all of these ideas into everything they do. So how they hire, how they retain people, how they sell the projects to their clients. Actually, it gives them an advantage knowing which SDGs they're supporting with their clients who are sometimes municipalities or local councils which care about these social equities and environmental impact as well as the transportation abilities. And we're seeing that the company can actually embed this into its business processes. So I'm really proud to say that VIA is now a company that has a clear and valid social and business model that creates social and environment impact in a way that is measured. They track it, and going forward, we will continue tracking it and helping them become even better at everything they do. So clearly, I think Impact Migrants are the existing companies. They're the ones who are already received investments. They're already in the market. We shouldn't wait until the new companies emerge and get market traction. Instead, we should really tap into the existing pool of companies and migrate them into impact.
Great, thank you very much, Cecile. I think VIA is a great example of a very established tech company that is just definitely generating impact and significant returns to date. So with that, we'll switch to another last case study from Bridges, Israel, a disruptive gravity-based micro-irrigation technology that leads to substantial water savings while increasing yields. So if you think about the water shortage problem in the world, which becomes more severe with the climate change, you realize that 70% of water used are used in agriculture. So if you want to tackle water shortage, you have to begin with agriculture. And the amazing number is that 85% of irrigated land globally is still irrigated with flood irrigation, which is completely inefficient and wastes a lot of water. Usually, typical drip irrigation needs high water pressure, and therefore it's relatively expensive, and it's a great system, but it cannot meet the economic yield of crop, which are commodity crops. And NRIP developed a unique system which uses only gravity for energy, does not need the capital expenditures or the ongoing energy, and is able to generate the same type of efficiency, saving a lot of water. So we invested $4 million to date in NRIP from about 2 years ago. And what we did, when we came in, we discussed with the entrepreneurs that we would like to measure what impact is the company is doing. And we know today that whenever we switch from flood irrigation to drip, in actual installations, we save approximately 60% of the water. And in the same time, we increase the yield of the farmer, improve his economic condition, and allow for a business model to be justified. So again, I think this is an interesting example of a very clear lockstep between the amount of or the number of installed fields, hectares installed, and the amount of water saved on a global scale. So just in terms of time, because we are running out of time, we'll switch now to a few questions from the crowd. I saw earlier that there is a question about Nazid. When we say fair employment, what do we mean? So I'll say this. First, we look at employment practices, which in some of these type of companies are not always what we would like them to be. So today in Nazid, I can say that all employees are receiving full social benefits. We have a system of promotion from within, and a lot of Bedouin women are now in managerial positions. And we also try in the relevant places to pay more than the minimum wage, because there is a thing called living wage, average living wage, which is a more proper measurement to aspire to. Any other questions?
I think there is one for Cecile, the one about VIA. For those who are not familiar with what VIA, what are they actually doing? How is it different from existing public transport solutions?
Yeah, so just very quickly, I'll explain. Existing transportation has a fixed route. And if you go and wait for the bus at the station, if you missed it, you missed it. And many times you'll see the buses running empty. And sometimes when you go, if you have to go to your destination, you have to switch buses. And there are some areas around the world and also in Israel that just don't have any bus service, or have 2 buses a day or 1 bus every hour or something like that, which creates really a very big problem for people for access to city centers. VIA has a software that optimizes ride sharing. So let's say that you want to go somewhere, you're going onto the app, you're saying where you're based right now, where you want to go, and VIA sends the relevant car with a relevant driver that picks you up and brings you to as close as possible to your destination without having to switch buses. And on the way, it picks up a few other passengers in a way that is certainly COVID compliant today, but even before. So it reduces the amount of time that it takes you to get from point A to point B. It's affordable because you don't have to switch buses and pay again and again. It allows people in transportation deserts where there's no access to access transportation. They also have fleets of cars. Some of their customers that are accessible for people in wheelchair, for example. They were the only transportation option during COVID when everything was in lockdown and you couldn't get people, even nurses and doctors, to the hospitals. So they were the transportation solution. So basically it's a transportation as a service activity. They don't actually own the vehicles, but they sell the software, and the software really helps create more social equity and reduces the amount of cars that are in the city centers. I hope that clears it.
Great. So there's another question from David. Is this all just a greenwash? And I think that what we are trying to achieve with the impact movement is a change in behavior at the corporate level. And I can say from on our behalf, and I'm sure James can echo this, that we actually see corporates changing their employment practices. And we believe that if you define an impact thesis and you measure it and you report it back to your board, then there is a discussion around the impact, then the overall impact increases. And obviously, we do believe that companies need to make profit. Otherwise, all of this will not be sustainable for the long term. So there is no shame in making money, and a lot of it, as long as we also make a positive impact. And I think we are running out of time.
We have time for just the last question for James.
Last question, great.
Go ahead.
James, I think there is a question about the world of books. Landfill is a major factor in increasing carbon emissions. If the goal is reducing emissions, is paper waste a priority? Or would reuse of other materials can be higher priority? James, you want to take this one?
Sorry, I haven't seen the question. I didn't catch that. Apologies.
Sure. I mean, in a nutshell, they say that landfills are a major factor for increasing carbon emissions. So maybe there should be a higher priority to utilizing the materials.
Sorry, as in when books are recycled, you mean, or? Sorry,
when they use landfills, that's the question.
Yes, I mean the whole point here, and water books. This is just one particular item. I mean, the whole point here clearly is to try and keep as much out of landfill as we possibly can. So, you know, in terms of the whole circular economy movement, this is one example of it, but it's all around just elongating the life of every single asset. And to the extent we can just keep it going around, keep reselling and keep avoiding landfill, that is the best possible solution. Reselling is better than recycling. Recycling is better than landfill.
Great. So with that, I will summarize our panel. First, I would like to thank my friends on the panel, Cecile and James. I think both of you were inspirational. The examples you brought are very interesting. And I think we've seen here, there is a growing number of professional investors who are looking to do impact investment. We're also we saw very interesting examples, case studies, demonstrating that we can achieve both impact and financial returns side by side. And one of the keys ahead of the investment is to identify those opportunities that can show a lockstep between the success of the business and the growth of the positive impact. Hopefully, this growing trend will force companies to look at the core values together with the aspiration to improve business results, and by this create a better world for all of us and our children. Thank you all for participating, and let's go back to the main event.